Hey traders, Raghee here, and in this update, I want to go through what we did this morning in a way that tomorrow when you start your day trading day off looking at futures indices, you can replicate as much of this process that you'd like and see how it works for you. This is what works for me. This is what's worked for me since I began actively day trading in the late 90s, and not much has changed. We don't need to reinvent the wheel. And for me back in the 90s, most of it was, let's start with the daily. What kind of mood is the market in? And the initial mood the market was in was one where we were below what I call the line in the sand. And that's just simply, really easily, gang. It's the 415 close from the previous session. Are there other levels to keep an eye on? Absolutely. But that is a very important one. So we keep an eye on that. Being below that is generally bearish. Now, it's not that we just think the day is going to be bearish, but we know that there's going to be a general weakness on the open. The open was a gap, not a true gap where we opened below the close and the previous low, but it was a gap down where we were opening below the close of the previous session. Those are not really as useful in terms of fading. I will keep an eye on that, but it's not usually a great straight up fade. But we do have a bunch of weakness that there is the potential to buy into, right? There is always that potential to buy into it. And that's where it makes sense to, not just, and a lot of folks ask me, Rog, do you fade a gap? There's a setup. There's always a setup, gang. We don't just say, well, because this happened, we have this gap, that we automatically buy. I think a lot of traders who thought to do that took probably a good bit, almost 20 points of heat. Chances are most traders aren't going to sit through 20 points of S&P 500 heat before the market rallies. So that's not a realistic trade, is it? And this isn't just singling out the S&P. We don't want to focus on a well-chosen example. We want to take a look at the gap in the NAS. Is this the typical nature of a fade? Don't buy it right away. Absolutely. Here's your 930 open, shot up, right? Oh, yay, fade the gap until not so much. Right? Now that was yet another, that was almost 100 points, right? How about the Dow? Let's jump on over to the Dow. The Dow was actually just selling off, right? We sold off on the Dow. There was no, again, if you want to see a really great example of not to presume a gap fade, I think the Dow was a really great example. And this is going to be the breakdown for this video, because this was a trade we actually took in the room. In fact, when I'm breaking down trades for you all in our free videos, I am focused on things that I actually walked our traders through in the room. This was when we did. So Dow, very weak on the open. In fact, it did something unique. We gapped down. It was just a plain old open below the previous session close. But keep this in mind. We started to sell off through the previous session low. And you'll see how much more weakness that gave us in the Dow. The thing that was really interesting is I wanted to buy into that. So is that a gap fade? Not at all. What this is not, now look, if someone momentum traded this to the downside, what I'm about to show you is going to help you keep those hard-earned points in your account. If you did not want to engage in the momentum, which I don't like to do, then you're going to like this setup that I'm going to share with you. So again, if you're one of those traders that sees some weakness on the open and you just jump in on that, in this case, downward heading momentum train, go for it. But when we hit a time and price-based volatility zone, that is that right there, you want to be in a position to A, pay yourself, and B, move at least to a break even, if not trailing stop. Why? Because that's probabilities, not certainties, probabilities, where the bulk of the move has been made. That's likely going to be a support zone. That's where we bought. Why did I buy? Well, I wasn't short. Oversold stochastic. And at the time, we did have a neutral market trend. So this zone in here made sense to focus on a buy. Yeah, we went a little bit lower, but we clearly were within our stop loss placement, and then that ended up being the move higher. Take some profit, move to a break even, take some more profit, move to a trailing. That was the morning. And some of what I've walked you all through here today, start with the daily, determine the path of least resistance. Doesn't mean that's going to be the direction of the trade. In this case, it wasn't. I didn't have a short. Why? Because we ended up in support. And this is where, remember that trades and traders can't always look for a textbook trade. Think of it this way. You have a number of boxes that you want to check as a trader. And the more that you can check, the larger your position size can be, the more confident you can be that there's a higher probability of follow through in the direction that you think. In situations like today, what did I recommend to my traders? Smaller size, more conservative levels. Consider, especially when you're day trading, risk management via, say, DIA calls. We had a whole group within our trading room that said, Rog, YM futures and MYM, I want to trade the ETF. Fine. August 5, DIA 325 calls. Worked great. It was a liquid strike. The remainder of the traders did mixes of YM futures or the MYM micro, right? No problem. However you can to manage risk when you can't check all the boxes. All right, gang, that's it. If you want to trade with me, if these ideas are moving the needle for you, awesome. Leave questions below. Thank you as always for watching. Thank you for smashing that like button. And bottom line, if you want to trade with me and find trades like this, I trade every morning with my Sector Secrets Mastery group, and I trade 2 mornings a week with the futures groups. I hope to see you in one of those 2 rooms. As always, manage risk. And I'll see you in Charts and Coffee, 9 a.m. at the Simpler Trading YouTube channel. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.